Part of it is one-off, right? They had the Red Sea conflict, which had 2 weeks of production out in Europe. You had the pull forward of demand into Q4 because of the IRA expiry and the Model 3. Definitely Q4 was super strong in 2023. That came out of Q1. So there are things like that. You also had the Berlin Giga arson. So all of those things probably accounted for tens of thousands, I would argue, of missed volumes. But the miss was so big, right? It's supposed to be 440,000. It came in 387,000. So some of it is probably underlying weakening demand in the US and in China and in Europe. Tough to say how much is which. Probably most of it is one-time in nature, but definitely a part of it is going to be something that's going to impact them for the rest of the year.
Tom, long-term prospects for Tesla can't be that bad, can they? Otherwise, you wouldn't have an outperform rating on the stock and a $298 price target.
That's right. I mean, look, they just launched a free trial of FSD, which could be pick things up in Q2. Numbers are definitely going to come down for Q2. So, and look, the stock, despite this performance today, is only down like 4.5%, which makes me think that expectations are already really low. FSD is an incredible product. They have the version 12 out there now. I watched a bunch of YouTube videos. People really impressed by this product. Maybe that gets people in the showrooms. Maybe it gets people to subscribe to it. Maybe it gets people to buy cars. So there is that near-term catalyst, but bigger than everything else, most of my valuation is on things like energy storage, something nobody's talking about, huge opportunity for them. And also autonomy, right? If FSD works, now it's a software business with a software multiple. So if they get that take rate up and people subscribing, I could see folks like myself start writing colorful reports talking about AI and autonomy. And it's a narrative stock, right? So longer term, that's really where my valuation is, not in the car business, but on energy storage and autonomy.
I strongly agree with Tom that Tesla stock is a narrative stock, at least in the short term. In the long term, the fundamentals eventually win. And today, Tesla stock is actually up 1%, definitely outperforming the markets by quite a bit. After really bad news, often you see a stock plunge quite a bit, and then more people that have invested in the stock for the long term, they sometimes take a bit more time to get familiar with all of the bad news, and then these people decide to start pulling out of the stock, and then that causes almost a perpetual stock crash. But in Tesla's case, we are not seeing that. The stock today is up.
This is a fork in the road period for Musk and Tesla. There's massive growth on the other side of this, but they need to get through this category 5 storm, put a line in the sand, either cut prices massively, squeeze the competition, and then put that strategy, or hold serve. Don't cut prices. Demand's going to be where it is, and ultimately you at least keep margins. The problem for investors right now, Julie, is that you're playing a game of blindfolded dark. No strategy. That's the problem. At a time, investors need handholding.
And Ives remains bullish. I think he does make sense there. I would like Tesla to choose a strategy a bit more firmly. Are we cutting the price further and we are destroying the competition, or are we prioritizing margins for now and some cash flow at the expense of deliveries for now? I think that question also largely depends on, does Tesla at this point have enough data to solve FSD? How fast is Tesla generating data? Good data. Does Tesla need to generate a lot more data? If the answer is no to that question, then do we really have to push much higher deliveries right now? And also, by how much can the costs be reduced for the Model Y and the Model 3? If you remember, on one of the earnings calls, Elon Musk said that it's a game of thrones, but really it's a game of pennies when it comes to reducing the costs of the Model 3 and the Model Y, and that Tesla has approached a limit in terms of how much more the costs can be cut for these two vehicles. At this point, though, Tesla certainly has hurt the competition really badly. You look at GM CV growth year over year, it's negative, even though they barely make any EVs.
Do you think the product's good enough, Dan, just to hold fire now on prices and say we are facing increasing competition, we've got the best product? Because that's crucial too. If you're saying to customers, look, we're cutting prices, then next minute you come back and cut prices again, they're going to hang on in there and wait for further cuts. There's going to be a reticence to buy. And I think that also surely plays into this. The messaging matters.
It's just psychology, right? I mean, if you going back to the days you buy a TV 2 weeks later, 10% cheaper. Look, it comes down to 2 million vehicles they're going to deliver this year. I mean, they are the brand leader, but it goes back to look how Cook and Apple got through challenging periods. They didn't cut prices. So I think it shows from Musk, this is probably the toughest time in 4 or 5 years for Tesla. They need to navigate through this to get onto the other side. This was a Cinderella story the last few years, now turned into a horror show, at least in the near term.
What would you like to see him do? Do you have a view, Dan? I know you've said, look, I just want the game plan. I want to know what the plan is. Do you have a view on what the best plan for Tesla would be? And I guess my follow to that is, we know that the stock's already down by a third this year. I mean, we often talk and laugh about how bullish you've been now for the long term. And if we talk about the long term too, is this a buying opportunity? Do you give him the benefit of the doubt and assume that he will come up with a plan?
Yeah, look, we've been here before. I mean, you've talked about it for many years, right? So the point is, we are strong believers that this will just be another, I won't call it bum in the road, but a challenging period. Musk needs to commit to being CEO next 3 to 5 years. Keeping the AI initiatives within Tesla, give the strategy on price cuts, margins, and guidance. And I think then at least you have a roadmap for investors to get through this. But that's what needs to happen. I also think a major buyback. You have $30 billion of cash, do a $5-10 billion buyback announced, because that's what they need to do. But it goes back to Jensen, Cook, Nadella. They've been through challenging periods. It got them through it. That's what Musk now needs to do, not just talk, walk the walk.
If the Tesla team wants to stabilize the stock price, I think that's not a bad strategy. The buybacks, though, unless Elon Musk really thinks it's the right time to do a buyback, I don't want Tesla to do a buyback. I mean, we had people screaming for Tesla to do a buyback when the stock was at $250, and today I think it's a much better opportunity to do a buyback. So if Elon wants to do a buyback right now, I would not push against that at all. Now, one problem with giving guidance to investors is you have to know what you can do. Maybe the Tesla team at the moment is a bit unsure about what's going to happen, and maybe Elon is now a bit fed up giving guidance, and then trying to meet it is just so stressful also. And if his compensation package has not been finalized yet, wouldn't there be a bit of an incentive for the stock price to go a bit lower so that that compensation package can be based on milestones achieved from a lower stock price instead of a higher stock price? I'm not saying that Elon is doing that. I'm just saying there's a bit of an incentive there. We haven't heard anything about Elon's compensation package, so I can only speculate here. I don't know.